Very happy to have Christian Milau here, Chief Executive Officer. Christian joined Equinox as a CEO in 2016 and has led his team through multiple mergers as well as projects advancements. So without further ado, Equinox Gold.
Good afternoon, everyone. And yeah, it is great to be back here in person. It's been a long time, that's for sure. And in our world, those last sort of year and a half, 2 years, has just been an incredible journey. And I think back, it's really about 3 years ago, or just over 3 years ago, I guess Ross Beatty, Richard Wark, myself, and a few others of the management team got together, and we did a three-way merger to create and launch Equinox Gold. And certainly the theory behind it was we're at a fairly low point in the gold cycle, and there needs to be some consolidation, and we have the right parties with deep pockets to actually get going and kick this process off. And we started in late 2017, and I remember buying our first asset when gold was about $1,100-$1,200 an ounce. And boy, it's certainly changed since then, although you wouldn't necessarily know with the gold equities in the last 6 to 9 months, but certainly the gold price and the cash flow and that of our business and a lot of our peers has just been fantastic. And I do want to flip through a little bit of that history here, and I'll go straight on to the summary slide. And really, we started as just mentioned, really with no mines. It was just a dream, a project, some financing, and some great people and entrepreneurs like Richard and Ross behind this company. And we thought that within 3 to 5 years, hopefully we'll build a 500,000 ounce producer. And that changed very quickly. We had the ambition to be a 1 million ounce gold producer and get to that diversified intermediate stage as quickly as possible. And now we have the 7 operating mines. We've got the 4 growth projects, and we'll soon be turning that into 8 operating mines. And as you can see, we're spread across the Americas. We've really made that our focus, and certainly investors have been demanding that of us. And we have a very large reserve base, 16 million ounces and almost 30 million ounces when you include all M&I. We're producing about 600,000 ounces of gold this year, and as I said earlier, our dream and our plan here is really to turn that into 1 million ounces of annual production over the next sort of 2 to 3 years. And we have that in our growth projects already in the portfolio, fully financed. We've got a really strong balance sheet, and I'll walk you through that later in the presentation, but really pleased with where we are and the setup to really just execute on our plan. Quickly going through the assets, I'll do it a little bit more thematically. In California, we've got Mesquite and Castle Mountain. They produce about 50, 60, 70,000 ounces of gold right now, but the plan there is to turn that into almost 350,000 ounces of gold, and we'll walk you through the Castle Mountain expansion in a minute. Mesquite's a mine we bought for about $158 million just over 2 years ago from New Gold, and it's been just a great producer. Once we put it in the portfolio, we decided we're going to invest in this mine. We bought a brand new fleet. We've been drilling. We've been actually adding to the reserve and resource. Just last week, we added 65% to the resource base and adding almost 750,000 ounces. And this is a mine we bought with a 2.5-year mine life. We've mined for 2.5 years, and we still have a 3-year mine life, and we're drilling still this year, and we're certain that we're going to add more years to that life. So it's just been sort of the Energizer bunny that just keeps giving and giving. And a lot of those ounces are in and around and below the current pits. We've grabbed some more land across the highway into the east of this deposit, and we still think that there's lots of upside potential there, but we'll get to that after we sort of work our way around the current footprint. So that mine we think will be going for a lot longer than I think a lot of people anticipated in the early days. And really it's just a great turnaround story where we've invested capital and given the team a chance to thrive. I remember the head of maintenance said he'd never gotten a new fleet of trucks, and he worked at Newmont before. And so when we delivered those last year, I think the team felt we had the confidence to actually invest and keep developing this mine. Castle's a small mine at the moment. We put it back into production. It produced in the 1990s, and we got the permit reinstated effectively, got everything we needed done. We reconstructed it last year, and it's been producing for a few months or a few quarters now. It's small. It's only about 30,000 ounces at the moment, but the potential there is fantastic, and I'll show you in a minute what it can be, which is well over 200,000 ounces for 16 years. Then in Mexico, we're producing about 150 to 70,000 ounces at the moment. That has potential to go to about 450,000 or 400,000 ounces eventually when we optimize and expand Los Filos. And probably, as most of you know who've followed this story, we've had some challenges in Mexico since we bought it from Leagold just over a year ago. It's been a real tough go. It's been the one blemish, I think, in our track record of putting together assets, moving them forward, building, financing, and really getting our production profile up. And it's been a real disappointment for me personally, and I know for Ross and the team. During that COVID period, we didn't have a chance to really build those strong long-term relationships with a few of the communities. And as we were investing in some new ore sources and pits there, the communities really wanted as much of the economics in the pie as possible. And ultimately it led to a couple of blockades, which has been very frustrating and massively detrimental to our market cap. I think it knocked, the whole value of Los Filos out of our market cap. And could almost argue really there's zero value in our market cap today. But it's a fantastic world-class asset, very big gold endowment with lots of potential. And we've taken a different tack. We said, look, we're going to be there long-term. We really have changed the management philosophy, brought in a long hand in Mexico who has worked in these kind of areas before with communities and blockades. And we've taken a long-term view on resolving them as well. And I can take some questions at the end if people want to dive into it. But we've drawn a line in the sand on certain issues and said we're going to obviously be working to provide as much of the economics and jobs and contracts into the local communities as possible, but we have to be able to operate the mine safely and with integrity and make sure that we have some flexibility to make this mine a great mine. And the potential there is to grow to 350,000 ounces a year. So we're past some of those issues. We've now got a good operating quarter underway, and we hope that we can just keep building back that stability and track record. And I've said to people, there's no guarantee it won't happen again, but I think a quarter after quarter, as we build confidence again, I think you'll just see it improve. And we're trying to work on a long-term partnership with the communities. Mercedes is a small mine. It'll do just under 50,000 ounces in Sonora. Nice little cash flow contributor, but one of our smallest mines. In Brazil, we've been extremely pleased with how it's gone in Brazil so far. We're producing a good 250,000 ounces there from these three mines. They have potential to grow to sort of about 300,000 plus adding Santa Luz, our development project, will take it to 400,000 ounces per year. So a nice generator of revenue and profit for us. With the Real being weak, it's been an excellent cash flow generating unit for us. And Aurizona alone, we rebuilt it. Myself and the team came in to really focus on that on day one. And we spent about $160 million to rebuild it. I think it's generated almost $200 million of cash in the first 2 years of operation. So wonderful startup and really great to see it operating and hitting its stride. Fazenda is just down the road from Santa Luz, and we see that as part of a core district in Bahia State where, potentially we'll have 180,000 ounces of annual production or 170, 80. And I'll show you how Santa Luz fits into that. But really, it's a 70-kilometer distance between the two of them. So we see it as almost sharing a big district and region, which we're exploring currently. And also RDM, our smallest mine in Brazil, has been a great little operator since we've taken it over and is contributing nice cash flow at this stage. We'll just keep going on, and we'll continue to invest in it. Aurizona, the one thing to note here too is there's an underground study underway. We've been drilling underground, and this mine we think will go on for decades, but it'll also be an underground mine in addition to the current open pit deposit. It'll bring up the grade, closer to the underground deposit will be closer to 3 grams versus the current 1.3 to 1.5. And it'll contribute to increasing that production level above 150,000 ounces. And that study should be out in the next 2 months, and will show a nice mine life extension as well. Our growth and development projects, and this is where the real excitement comes. There's potential to add about 600,000 ounces of production on top of our current production base of 600,000 ounces. So the two I'll talk about in more detail are Santa Luz and Greenstone because they're really topical today. But Los Filos, we're doing a study on the CIL plant. It's currently a large heap leach operation, and we can probably add about 150,000 ounces from adding a CIL plant, which will be 8,000 tons per day. That study should be done in the next few months. But as I said earlier, with the resolution of the community issues there, we said to the communities, we can invest in other parts of the world where we have projects. And once we get the stability back, we'll go back in and invest there. So it's a little bit of a wait and see there, but maybe a year, maybe 2, and then we'll be investing in that part of the world again too. Castle Mountain I'll touch on before Greenstone in the next couple of slides. But Castle Mountain is a great project. It's right on the Nevada border there, about an hour and a half from Las Vegas. Potential to produce 218,000 ounces per year on average from phase 2. And we've really advanced this significantly. We've gotten back into production, so it's a brownfield site that's now in production again. It's a good tax generating entity there in San Bernardino County. We've been very supportive of the project to date. And what we need to do now is submit an amendment for that permit maybe do a new EIS, and we really think it'll take us 2, maybe 3 years to get that done. So it's not a quick process, but we're going to stay within our footprint. So this is a past producing mine that has an EIS boundary and a footprint. We're going to stay as tight as possible in there, and we're going to look to actually improve some of the technology in that around the site. So we're going to be looking to filter the tails, stack it on the leach pad, maybe look at some solar and sort of more green energy sources, anything we can to make it as sort of California friendly as possible and easier to permit. But once that's up and operating, it'll be a huge revenue and profit generator for the business. And it would sequence really nicely if you look at this schedule. You know, Santa Luz will be done by about this year end. You'd start Greenstone construction, that'll be done by early 2024. And then Castle Mountain, hopefully that permit will be in place by then so you can start construction after that. So they'll sequence one after another there. Looking a little bit more closely at the actual current project. So Santa Luz is expecting first gold pour in Q1. It's actually tracking on plan, on budget right now, $100 million of capital. A lot of the infrastructure is already in place, so it's a fairly small upgrade to the plant with the crushing and the milling capacity, and it'll produce about 110,000 ounces of gold per year. So it'll be a great contributor to that district with Fazenda, and actually we'll be exploring the belt in between the two. So that should be done and contributing next year with, 3/4 of the year at least in production. Greenstone's the big project. That's the one we want to announce full construction on later this year, kind of right on the back of finishing off Santa Luz. It's 5.5 million ounces. It'll produce over 400,000 ounces in the early years and then 360 for its life of mine of 14 years. Orion's our partner. They own 40%. We own 60%. We bought this in the Premier Gold acquisition a few months back. We just love this asset. It's going to have a much longer line life when we get a chance to look underground and to the east. There's lots of potential here, but we've got a nice starting 14-year mine life and a team in place that's already putting in the actual temporary camp, the water treatment plants. They've been clearing the trees, building up the project team, and actually integrating with G Mining, who's going to help us actually deliver this project. The feasibility was done just, I guess it was the end of last year. Those costs are a little bit out of date, so we'll come out with a schedule and a new cost update, but it's probably around $1.5 billion Canadian for this project, where we own 60% of it and Orion owns the other 40%. And we plan to get that going late this year, so you're pouring gold in that first half of 2024. So it's a big endeavor for us, but it'll be the 3rd or 4th largest gold mine in Canada once it's up and running, so a heck of an asset. And just touching on ESG quickly, although I've got a 65-page presentation on this, it's just a big topic, and it's something that we do live very seriously, and it's part of their DNA. And when you look at Ross Beaty's history and track record, you know, he really is an environmentalist who's also a miner in many ways, and you can actually be both. And every to it, whenever we build a project, we look at the energy sources. We're looking at our trucks and the ways to convert from diesel in due course. We're looking at all of our power in Brazil at the moment, and there may be ways to move to all wind and solar. We've had proposals for that, and it'll actually save us money, $10 million a year potentially. So lots of interesting things happening on the energy and the carbon front. We do need to analyze when we can go to carbon neutral or carbon net zero. We're an early stage company that's really just been formed recently, so we're going to spend a little bit of time just getting our plan in place, and then we'll come out with that announcement when we're ready. But we also hope on the governance side of things too. We're one of the leaders in the industry, and I'll touch on that in a second. So our portfolio is diversified now. We've got the 4 countries. We've got roughly a similar sort of net asset value, we believe, and scale in each of the countries when you get them all up and running and expanded. We really wanted to put in place something that's liquid, diverse, and ultimately can weather storms. And at the moment, we are suffering because of the Mexico exposure. It's probably 25%, maybe 30% of our net asset value. So it hit us when we had the issues there. And as we get Greenstone and Castle and other projects up and running, you'll see that drop to 10 to 15%, and we'll have a nicely diversified, almost a quarter for each of these countries. And when you step back and look at the overall portfolio and platform here, we're moving towards 1 million ounces of production, as you can see in the second column. That puts us towards the upper end of the intermediates. And then you look at our production growth. I think really it is unparalleled versus all of our peers in this sector. And our plan was to put in place a growth profile that was funded while no one wanted to buy growth. We felt that we could acquire assets and put it in place while it really wasn't on everyone's lips. Everyone was looking for dividends and sort of steady state cash flow. And We do believe as the gold sector will improve over the next number of years here, whether it's next year or a few years from now, the fundamentals are wonderful, and we'll have internally funded built-in growth profile to take us over 1 million ounces. And we've got a large reserve base to support that. But then you look at the left-hand column, you look at the price to net asset value, and it's about 0.56 on this basis here on analyst consensus. And that's the part that we really have to do our work on. And I really fundamentally believe we've got to earn our way into the top half of that and maybe towards the upper end. But what we're planning to do is over the next few years, obviously build back that stability in Mexico, execute on Santa Luz and Greenstone. And at that point, we really think we'll be earning our way up towards that 1x multiple, which is a big improvement, a big uplift on our valuation and our share price. And right now we're suffering because of the Los Filos situation, and maybe because we do have some development in the pipeline at the moment. And as we execute, I think you'll see that multiple gap shrink. And in terms of the balance sheet, it's really been fairly rock solid. We've got lots of cash. We've got $330 million of cash today. We've got a revolver with $200 million available and a banking group that put in place these facilities when we were about half the size as we are today. So lots of flexibility there to amend or increase or slightly amend that whole bank facility. And then we've got operating cash flow. This year we're 600,000 ounces. Next year it'll be 700,000 plus ounces, and it'll be at lower cost. And so that operating cash flow will just continue to grow each year on year. So that'll contribute towards the CapEx that we have over the next few years. And the one other little sort of hidden gem, I think, in our portfolio as well is we've got 2 investments in other companies. Solaris, we own about 70% of. It's a copper business that we spun out a couple of years ago. Richard Wark and Dan Earl are running that right now. They've done a wonderful job to take it from, I think our original investment was about $20 million, and it's currently what we have left is worth about $400 million Canadian. So really is a nice little benefit to our balance sheet. And also we've got an investment in I-80, and that was the spin out when we took over Premier Gold, and Ewan Downey is now running that out of Reno. And that's actually gone fantastically well. If you saw the announcement a couple of days ago, they're actually consolidating a little area in Nevada there. They're doing a deal with Barrick to actually get the ability to process some of their refractory ores. And the potential there is to grow that to a multi-100,000 ounce producer, and we own 30% of it. So really pleased with what they're doing. And the market cap right now of I-80 Gold is the same as the whole market cap of Premier Gold when we bought it 6 months ago. So kudos to them. They've done a wonderful job. So we have $600 million in investments in Canadian dollars from those 2 assets on our balance sheet. And just touching on that governance, we do think like owners of this business. Ross owns about 8% of the stock. He's put in about $150 million. All of myself and the management team have put in our own money in a very material way personally. And so we live and breathe this stock. It's been painful over the last year, and we're determined to actually recover that value. And one thing that is really nice here is that we've had the support from since we were a small company all the way up to now from both Richard, Ross, Lucas Landina, a few other entrepreneurs to allow us to hopefully get ahead of that small space and be able to finance acquisitions and really build a portfolio out. And when you look at the final slide here, it's just bringing together the catalysts, and there's really been too many to actually list, but we're really changing in our phase at the moment from pure sort of M&A growth-oriented focus to more of a execute on our development projects, execute on actually our operations each year and deliver on our guidance, and get Santa Luz and Greenstone built. So you've got that portfolio that can deliver you basically 1 million ounces a year of annual production at a good cost base. As well, we'll keep exploring to expand our reserve and resource base, extending those mine lives that are less than 10 years to 10 years would be our goal. And then ultimately support our investee companies as well as they grow and create value for us as well. And really, the M&A is really more of an opportunistic situation now where we'll look at it if there's something really that we can't refuse to look at, and it's really accretive and exciting, but I think it's secondary to really executing on our internal portfolio. And that kind of brings together the story. Equinox has really come a long way in 3 years, really proud of what we've achieved. We've had the one stumble there, obviously in Mexico, and we're determined to fix that and execute on the delivery of these projects. And I think it's an exciting growth story and an extremely good valuation. And in August, after our second quarter results went out, Ross bought 2 million in stock in the market. Every single one of the senior managers went out and bought stock as well, in a smaller way, of course, but we just believe at $8 and $9 a share, this is an incredible opportunity to buy one of the best growth stories in the sector.
Great. Thank you very much. I think we have time for maybe a question. If anybody's got a question from the audience, please move to the center aisle and use one of the microphones. And I don't see anybody asking a question right now, so maybe I can squeeze in a quick question. Equinox has been one of the most acquisitive companies in the space. Given the current disconnect between the gold price and the equity valuations, can you continue to be so acquisitive?
Yeah, it's a good question. I mean, I think, as I said, we're going to de-emphasize the M&A at the moment. There's two reasons for that. I think we've been really aggressive on the M&A. We've got a platform now that gets us to the 1 million ounces. But also, you're right. I mean, with the disconnect with our valuation, we don't have a currency to the same degree at the moment to acquire things. So I think it's a bit more low-key and in the background in terms of our strategy at the moment.
Excellent. Excellent. Thank you very much, Christian. Excellent presentation.
Thank you.